Are there more interest rate cuts coming in Canada? Could the S&P 500 reach a new milestone at 7,000? And what typically happens in the stock market after two big back-to-back years of performance? We're exploring all those themes in this week's Market Moves. Let's dive in. Okay, let's start with interest rates, which have been coming down in Canada, and there's an expectation that trend will continue. Royce Mendes, who's head of macro strategy at Desjardins, is anticipating that the Bank of Canada will continue to reduce its policy rate by another 100 basis points this year to 2.25%, with a continued reduction in early 2026 to get to a cycle low of 2%. Mendes says that while progress has been made in the fight against inflation, a coming wave of mortgage renewals represents a potential economic shock for Canada's economy, especially for people who took out variable rate mortgages when interest rates were much lower. Meanwhile, another wild card, according to Mendes, is the possibility of tariffs being directed at Canada, which could force the Bank of Canada to lower rates even further. Meanwhile, the possibility of lower interest rates in the U.S. is one reason a longtime market watcher thinks the S&P 500 could reach 7,000 for the first time this year. James Thorne, chief market strategist at Wellington Altus Private Wealth, believes that Donald Trump's pro-business approach in the White House could be a key catalyst for stocks. Now, even though there is a tariff risk, in Thorne's opinion, the inflationary impact from that is more muted than the market might expect. And on the interest rate front, he's expecting that we could see more interest rate cuts than what the market is currently expecting in 2025. Now, if the S&P 500 were to reach that 7,000 milestone, that would be quite an accomplishment for the stock market, considering we just saw back-to-back years of performance with the S&P up more than 20%. While some might think that big run-up is a bearish indicator, back-to-back gains of 20% or more for the S&P has historically been a bullish indicator. Strategist Jeff Schulze of ClearBridge Investments looked back at stock market performance since 1950, and he found in all examples, there were 8 of them, where the S&P 500 rose 20% plus in 2 back-to-back years, that in 6 of those examples, so 75% of the time, the S&P rose in the 3rd year, and on average the gain was more than 12%. All right, those are our market moves for this week. What market moves are you watching? Let us know in the comments, and don't forget to subscribe so you don't miss our next Market Moves video. See you next week.